I just think it's really important. People need to know lenders are still lending.
Yeah.
There is still money available for people to borrow. There's still money available for people to buy property. It's still there. It's still happening. It's a completely different space to what it was on the last credit crunch in 2008, where lenders didn't have the liquidity to cope with the problems. There was a lot of regulation brought in, very positive regulation, where you couldn't be in that same position again, really. So lenders have money to lend. They're not being squeezed. People can still buy property.
Well, hi guys, and welcome to this month's catch up with Shane on the mortgage front, because a lot's happened. The media are getting involved, but there's actually facts out there that are actually giving buyers more opportunity to get into homes, to move. And I'd love to have a chat with you, Shane, about where we are, from where we were, a month or two ago.
Yeah, absolutely. A month is a very short space of time in mortgages, particularly at the moment. Yeah. We're seeing so many changes. It's not scary, but it's fascinating to see what's going on. Going back to when we spoke last time, when we talked about how lenders were increasing their rates to manage their pipelines, and obviously with the result of cost of borrowing and things like that, and gilts, etc., they were increasing their mortgage products quite quickly. What we're now seeing, and in particular, even in the last 3 or 4 days, I've had consistent emails from lenders, because we get advance notice of these things, where they're giving us advance notice, we are going to be reducing our rates on this date or that date. So we're seeing lenders now starting to reduce their rates down, because the cost of borrowing has come down. And more importantly, they're now being able to manage their pipeline of business and keep to their service level agreements. So they're now able to bring that rate back down. So the manipulation is now bringing it down. Even though the Bank of England base rates increased by 0.75, you're actually seeing the fixed rates in particular start to come down because of this process. So, we had one lender in particular earlier this week that gave advance notice. They were reducing selected rates by up to one percentage point, which is massive. Obviously, with trackers and discounted rates, if they follow the Bank of England base rate, they have increased, because that's what they track. Yeah. But significantly, you're seeing 2-year, 3-year, 5-year deals are being reduced on a daily basis now. That's not going to continue. That is definitely not going to continue, but they have the margin and capacity to bring them down at the moment. Right. They probably will start to sneak back up again come December, January, is my personal opinion, when we get another rate announcement. But right now, you're seeing those reductions again. And that could only be good and positive for borrowers and buyers. That are looking to either move or get into the market, and even landlords. So we're starting to see some rates for buy-to-lets are coming down as well. There is still the challenge with the calculation you need to fit with landlords, but the rates are starting to come down on that side as well. So yeah, it's really interesting at the moment with what's going on the mortgage front.
The one thing that really gets me is how the media jump on and really sensationalize everything. We've seen crash, we've seen 30% drop, we've seen all of this stuff, but yet you're witnessing rates coming down, and the market gaining stability.
Yeah, absolutely. I remember when we chatted previously, there was big headlines in the national press and on the online news about rates are now above 6%, rates have hit 7%, massive features. But now you've got lenders that are sub 5% again, and they're getting lower. But you're not seeing that coming into the press. You're not seeing, these lenders. I've only seen one article where a paper is published online saying it was actually, I think it was Santander and Nationwide reducing rates significantly. Yeah. And that's the only article I've seen. But my inbox is full of half a dozen, 10 lenders or so that have reduced their rates just in the last week. and also some lenders coming back into the market,
Okay.
and some lenders introducing new products that they withdrew previously. That's not getting any press or traction either. So you've got lenders that are coming back into the market, and you've got lenders introducing new deals that were there previously and are now coming back in.
So this is why I see our role in educating our clients is just so important during this time, because if people are on their phones and they're watching the news at night, it's very easy for them to shift into a negative mindset about the property space, about their next purchase. And like we said on our last call, it is a long-term investment. It's a long-term play with property. Yes, obviously you can do things like flips, but that's different. But for the home mover, for the buy-to-let landlord that's locking in for the next 20 years, to park some of their money to get away from it being eaten by inflation, we have a responsibility to educate our clients on where things are, and so rates coming down. Are you seeing rates in the fours now? Shane?
Absolutely. Yeah, absolutely. We're seeing rates in fours, mid fours for some. And even for some people, it's not right for everybody. But even some people that are prepared and are comfortable to take a risk, we're seeing tracker rates under 4% and variable rates under 4%.
Right.
There's obviously an element of risk with that.
Yeah.
However, they can be quite attractive to the right individual in the right circumstance. So there's a whole raft of different rates and different scopes of where you could be. But again, we touch on sensationalism. There's stories of massive price corrections and reductions in house value. But what you've got to remember, and you can see this statistically, house prices typically and house values double every 25 years. However, more recently, in the last 15, 20 years, you've seen that doubling of those property prices in a shorter space of time. So, if they're talking of corrections in geographical areas of being quite different, but typically they're talking of an average correction of 10%. But you've seen house price growth even over the last 24 months of anywhere between 19 and 30%. So a loss of 10%, but you've seen your house price go up by 20 to 30% in the grand scheme of things. Is not massive. And if you're intending to stay there for the long term, you'll see that correction come back in the future. So,
absolutely. And I think a correction is very healthy for the market, because people can actually get out there now and they can view property, they can make some offers, they can make the right decision for them. It's important for the property to be priced correctly. Long gone are the days where we overprice a property because the market is so buoyant, and we're saying to the vendors that it's likely that you'll get in excess of what we're stating here. Buyers are keenly aware when a property is overpriced. So we're having these conversations with our client base day in, day out about being sensible with that pricing, and giving people the time to actually get around and find the right property for them.
Yeah, I think what you're saying is really important, because obviously we deal with sellers, we deal with buyers. And I often deal with people that are just starting that process of selling their home, and the first thing they need to do is get a valuation. And I warn my clients, you're a family business, same as us. And I warn my clients about, I won't name them, but there are certain very large corporate estate agents where they try and secure that business and lock you in for 6 to 12 weeks with a much higher valuation. I always advise my clients, don't be blinded by the highest valuation, because then invariably what happens is you're going to lock yourself in, and then 10 days later they're going to turn around to you and say, there's been no interest, we need to now knock the value down. Whereas if you speak to someone who's just genuinely and honestly going to say, this is what the value of your house is, you've got a better opportunity to sell it quicker, rather than going with the being blinded by a much higher valuation from a large corporate. Invariably, that's what I've been doing this a very long time. I see it all the time. And then you're stuck, and then your house on the market for ages. Then you go, well, why has it been on for 10 weeks? Why has it been on for 12 weeks?
Exactly.
you don't want to get caught. So what you're saying about giving a really good, honest, accurate valuation is helping the client as well.
Indeed, and also those overvalued properties, that invariably have to come down 10%. The vendor believes that now, well, they can believe that they're losing 10%, but it wasn't a true valuation anyway. So that it's not a real 10% that they've lost. It's just now coming back down to what is real and what the market is willing to pay based on the sentiment, based on the comparables locally. So I think it's important, very important to get people, because at the end of the day, we want to help people move on to their next property, help them achieve their goals, and that's why we do what we do.
Absolutely.
So we talk some rates then. So what are first time buyers at the moment able to lock in for say a 2-year fix, 5-year fix?
But I mean, typically at the moment, in terms of if you want to look at, so the lowest variable rate at the moment is 3.13% variable. That's 75% loan to value.
All right.
The lowest tracker, which is different, is 3.24. And we've got to scroll on quite a few pages before we get to a fixed rate, because there's a lot of difference. Let's have a look.
And these are all 75% loan to value.
Yeah, these are all 75%. These are 2-year fixes, these ones. But again, these are just to give a flavour and an idea, really. You can look at different terms, different products, and so on. And the best 2-year fixed rate currently is 5.49. It's a big difference. So you can see why sometimes a variable rate could be an attractive and appealing option in certain scenarios.
Well, absolutely, because even if the Bank of England increased by another 2% on the variable, they're only going to 5.13.
Yeah.
And it's still below the 2-year fix.
And there's obviously loads of economists giving projections. So I mean, again, it might change when they do the next EPC meeting, the next meeting, which I think is next month, 2 weeks into December. And you might find it's completely different again, because technically there's a probability we'll be in a recession come January, 2 quarters of negative. And it might change their outlook, but they think rates are their base rate will probably hit 4.5% to 5%, 4.7 possibly. But so on an 80%, again, just looking at a 2-year, even at 80%, you've still got the same discounted rate. 3.13 is the best option, even at 80%. The best tracker is 3.49. And the best fix, again, we need to flip on quite a few pages to get that. And the best fix at 80% is 5.62. So again, big difference. So
what a 5-year fix looking like at the moment?
So let's look at those. I'll start at 80% again, because that's the one I'm already on. Let's have a quick look at that. Again, starting with some variable rate options. So the best 5-year, so this is at 80%. So you've got a discounted rate of 3.65 and a 5-year fix at 5.24. And there is a tracker at 4%.
So pretty similar to the 2-year fixes, really.
Yeah. I mean, obviously, going back to previous times, what you tended to find is that the shorter the term of a mortgage product, the lower the rate is, because of how they price their swap rates and forward money. But you're not seeing a lot of that at the moment. You're actually seeing 5-year deals in some circumstances are actually better value than shorter 2- and 3-year options. So let's go back to 75%. Give some comparables for that. At 75%, again, the discounted rate is still 3.65. The best tracker rate is still 4%, and the best fix is 5.23. So not a lot of difference on those sort of loan to value brackets.
No.
As you go higher, so once you get sort of 80, when you go 85, 90, there's a significant difference.
So what would that be? Because for first time buyers, commonly, a lot of people do a 90% product just to get themselves on the market. Yeah. Be interesting to know what.
So let's look at 90% and look at 5 years.
Okay.
Just to give a comparison. So the best 5-year rates across the three. So you've got a discounted rate of 3.99.
Yep.
And the best 5-year fix at 90%. Actually, this lender's just dropped their rates, so actually it's pretty similar. So,
is it?
5-year rate 5.39.
5.39.
So this is where you're seeing a big difference, because you were talking, these are over 6%.
Yeah.
Not too long ago they were over 6%, but you're not seeing a lot of that in the press, as I was saying.
No.
But you're getting, so even at 90% loan to value now, you're getting okay rates.
Yeah. Yeah.
So these have dropped significantly in such a short space of time.
It's confidence for the market, isn't it? That things are settling down from the craziness since that mini budget, and we are entering a more kind of normal market. We've been so used to such low rates that these sort of 4-5% rates in a few months' time, they will be normal again. People have adjusted mentally to them.
Yeah, I think you might still see, as I said earlier, so you might still see some lenders tinker with their rates down a little bit for the next month or so.
Okay.
But again, even with the Bank of England rate going up, because they've got enough margin to do so now. But I do think that come the next announcement and into the new year, rates will start to level off and will then continue to be steady at those sort of levels, and then increase in line with the Bank of England base rate increases that are expected. So that's where it is. Again, it's still positive. It's still, you're seeing rates below 6%. You're seeing rates below 4.5%.
Yeah. And
again, with the riskier rates, you're below 4.
Yeah.
So
no, that's good, Shane. It's good. Well, thank you, buddy, for the update. It's always good chatting and
absolutely
discussing such a fast-moving space, and I'm sure next month we'll have some more great stuff to chat about.